Venezuela is quite rich in heavy crude oil.
Right, right, Pulkit. Hi, this is Harsh here. Pulkit, if I were to try and understand the energy complex better from an Indian context or perspective, there's so much happening on the geopolitical side. Uh, how much of a benefit has India had of Russian crude over the last couple of years, and how significant is the fact that we will be moving away from Russian crude? Give us a sense of that.
So, I would sort of go back to hard numbers. Where S&P Global Platts have assessed the price of Russian Urals over the last few years. I mean that those discounts when we started looking at this market in the start of 2023, the discounts were as good as about $16 to $17 to dated Brent landed into the west coast of India. Then it subsequently narrowed quite significantly to sort of $3, $2.50 levels, and it remained there for the large part of 2024 and to 2025. What has happened over the last 2 months is those discounts have widened again, because the risk perception of buying Russian crude again has gone up in the last 2 months because of all the sanctioned actions that has been taken by US and Europe. So there has been quite a significant discount that any buyer of Russian crude, including India, would have enjoyed over the past couple of years. In terms of the fate of flow of Russian crude into India, that's anybody's guess in terms of how that would turn up. These are complex geopolitical issues. While we have seen some fluctuations in flows in the last 2 months, we have not really seen flows sort of vanish, right? So we do see flows of Russian crude coming out into India as well. Yeah.
And how much of that benefit, Pulkit, comes to Indian OMCs as well as Indian refiners, if I can ask you that? Because you're clearly seeing pressure and on stock prices today, and I'm not asking you to comment on that pressure, but I'm trying to understand whether it's justified and how large or how material is that impact.
So, of course, I'll stay away from sort of commenting on what matters to the stock prices. But in terms of the price levels of Russian crude landing up in India right now, where we are assessing that is $7 discount to dated or thereabouts, landed on the west coast of India, which means any Indian buyer, which is any of the refiner that is consuming, would essentially right now, if anyone is buying a barrel of Russian Urals into the west coast of India, and east coast of India would not be mightily different from that, but it would be about $7 discount to dated Brent. So it's a sizable benefit right now. The benefit or the discounts have gone up, as I said, over the last 2 months, because the risk perception with Russian crude has gone up quite significantly as well. So
Okay, and Pulkit, just trying to understand what the global oil pricing dynamic could be, given that you have OPEC Plus on one hand, that in its meeting over the weekend, they've called for a pause yet again. On the other side, as and when this plays out, we understand it could take time. But when it does, what do you think the supply of oil could look like in the market, and eventually, what could the pricing be?
So, and I'll take reference to our S&P Global Energy, analytics team, who sees the current market being oversupplied by the tune of more than 1 million barrels per day, and this sort of situation of oversupply has been continuing for some time, which means that we've seen a lot of stock build happening around the world, onshore and offshore, over the past few months. It is expected widely in the market that this situation of oversupply will remain at least until the summers of 2026, when it will start easing. So, in terms of the oil markets, the demand is quite seasonal as well. So there is a wide variation between winter demand and summer demand. Right now, we are in a lean demand period. So, overall, the picture looks quite quite weak in terms of the oil markets. And that is why all of these geopolitical factors have not done much to the price. In terms of the pure sort of pricing dynamics, our analysts back in the office uh, do see oil prices remaining sub $60 level, and this is at dated Brent I'm talking about. They see prices of sub $60 levels in the first half of 2026.
Okay, Pulkit, appreciate that outlook. And thank you once again for taking the time out and speaking with us. Great chatting with you today.
Thank you. Thank you so much.
We have Ms. Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities Research, joining